Hi, I'm Gary Matteson. I work for Farm Credit in Washington, D.C. Today we're going to be talking about growing cash flow, how you understand what your cash flow is, and continuing that concept of being business minded with this particular tool of explaining further cash flow budget. The example that I'm going to be talking about today is a small scale vegetable business, somebody who's selling direct to retail through farmers markets or a farm stand. And this business that I'll be talking about is a compilation of 40 other businesses, really. It's a benchmarked information. So as you think about the numbers I'm going to be talking about, these are kind of like guardrails for your business if you're doing this kind of direct to retail business. I'll explain that a little bit further later, but it's important to note that on the website we'll be talking about in a few more slides, you'll be able to download information about either a pastured pork business or a grass-fed beef business that would be very similar to this example, which we're talking about will be about vegetables. You can certainly include livestock in your farm business planning. And if that's the case, I would suggest that each time you have a different sort of operation, whether it's hogs or whether it's cattle, that you actually approach it as an entirely different business so that you can know what the costs are and what you're expecting to put into that business and what you expect to get out of that business for each aspect of what you're doing. You can combine them all later, of course, to show what your farm is doing, but it's very helpful for planning purposes to think of each separate part of your operation as an independent business. And before you start any business, particularly a farm business, it does require some self-examination, some thinking about yourself, about what you're good at, what you're not so good at. And probably the most important is the last bullet on this slide, which is your capacity to delay gratification, I guess is another way of saying self-discipline. In farming, the main reason for planning is that your income tends to be very seasonal, as the same for your expenses. Think of it in terms of you put a lot of money into your farm business, into the crop in the spring when you plant it, and you may not start harvesting for vegetable business until May or June, or for some crops, row crop sort of businesses, you might not harvest until the fall. You have to plan and have the self-discipline to be able to plan to spend money in a very measured way so that you can make it through to that time when you actually have income, when you have sales from your business. It kind of sounds backwards, but knowing where you want to end up, knowing what success is, well, how you define success is really a good place to start. A lot of folks make the mistake of thinking in terms of acres and tractors, the size of their tractor. I want 300 acres. I want a 300 horsepower tractor. I want 300 cows. All that is good as a picture, as a vision, but really when defining success, you want to be thinking in terms of, so how much am I actually going to be selling? What am I expected yield per acre going to be, or what, most importantly, what's my net profit going to be? It doesn't mean that has to be big. It doesn't have to be a big business. If you're a retirement farmer, you're a late in life beginning farmer, let's call it that, and you're starting a business, you want to be very careful about what you put into the business for an investment and what you expect to get out of it. It's at any scale or size of business, it's important to define success. You can see in my definition of success here, I refer to net profit, which is what you're planning to earn after you've paid all the other expenses of your business. Net profit's an accounting term. Yeah, you can look that up on the internet, find all sorts of very complicated sorts of explanations of that. But my definition of net profit for thinking about planning is net profit allows you the ability to do what you want to do again next year. If you lose money, if you have a net loss rather than a net profit, you have a lot fewer choices. That money that you've lost has to come from somewhere, from your savings, from your partner's income. And there's a limit, there's a time limit on how much money you can lose for how many years. No matter what the scope, how big the business is you're thinking of, you need to think in terms of how can I keep this business going next year, which is my definition of net profit, the ability to do what you want to do next year. I don't know what your vision is for your farm operation, and I'm certainly not here to tell you what it should be. You should be looking for people that you trust to tell you what they really think of your plan for a farm business. If you want to get good advice when you bounce ideas off someone who's a friend, a neighbor, a mentor, or a loan officer, then it's a really good idea to have your story, your business plan organized in such a way that you can get help from many different perspectives. A business plan is a way to organize your story so that you can ask others for help. To know what your business is, have that plan for success, and understand that even though you may not like the numbers, like dealing with the numbers, that you need to have a budget there, because that's what a lot of other people are going to have as their perspective. Rather than thinking about what you're going to grow and what you're going to sell and how great it's going to be at the farmer's market, somebody else's perspective is certainly going to include, so how much are you going to sell? What are you going to sell? And how much is it going to cost you to grow that stuff? And also to think about contingencies. Contingencies are like what could go wrong. We talked about that earlier in the risk management webinar that you probably looked at earlier. I mentioned before self-assessment. Here's another part of self-assessment, thinking about what you're good at. And really the important part of these three skills I list here, is figuring out what you're not good at so that you can have some help there and replace it. Most of us go into farming because we're interested in production, making something, using our hands, doing something, producing that crop. A lot of us think of somebody who likes to go to a farmer's market, want to be there to actually sell the stuff, and we might even be pretty good at that. The business skill that is absolutely necessary for any business, hardware store, Walmart, you name it, every business has to have these three business skills in it. The one that farmers are least likely to be interested in is financial. It's not as interesting. It's not as exciting. I mean, I farmed for 30 plus years. I had to beat myself up to do the financial reporting and accounting that was necessary for that. The idea here is not to say, gosh, you have to learn how to be an accountant. And with the next few slides, I'm going to be showing you numbers and it's going to make you nervous. I'm not trying to turn you into an accountant. I'm trying to help you understand that to make good decisions about the future of your business, you need to understand the outcomes of that accounting. You need to understand the story that those numbers are going to tell you so that you can make good decisions and so you can communicate to others what you're trying to accomplish. The basic business plan that I'm showing you here as a blank is this is an outline of how to think about planning. I'm not suggesting that you fill this in and bring it to a loan officer and try to borrow $250,000. That's not the point of this. This is to help you understand how to think about business planning. And probably the most important part of this form is right there in the middle where it says SMART goals. That SMART, S-M-A-R-T, stands for specific, measurable, attainable, rewarding, and timed. If you don't have objectives, goals that are specific, measurable, attainable, rewarding, and timed, you're really not writing down enough to help you answer all the questions about how you're going to accomplish that. That's the whole purpose of this one-page business plan. Let me show you a version here with some of the key risk areas. You can see under objectives there, the key risk areas would involve goals or objectives involving people, financial, production, and marketing. And the fifth one that I haven't listed here is legal, which pretty much means buy insurance. So let's look at some examples. This is the handout that's available to you. It's filled in with examples. You can see in the under objective 3, the third column over is a production goal, and that objective is to increase efficiency while offering customers a wider selection. And then the SMART goal is decrease COGS. Okay, there's some jargon. Cost of goods sold per pounds of tomatoes. In other words, I'm going to be more efficient. I'm going to produce tomatoes at a lower cost. My action plan is going to be to measure production per worker and per variety, and so on through the rest of that example. I'm not saying that this is the recipe for how to grow tomatoes for this business of Tyler's Tip Top Tomatoes. What I'm suggesting is if you use this form, this one-page business plan as a template to think about your objectives and then how you're actually going to implement, how you're going to accomplish those objectives, what your goal is going to be to actually implement those objectives. That's the essence of business planning. So again, this is about how to think about business planning, not fill this one page out and call it a day. That's a business plan. You know, if you actually thought about it in terms of how many of these pages would I have to fill out, you might have, let's go to this slide. You might have 10 pages like this about people, and 5 or 10 about financial, and maybe 15 or 20 about production, because that's where we like to spend our time, right? Thinking about how we're going to produce something. Again, this is a conceptual way to understand how you should look at business planning in terms of making sure that your goals are specific, measurable, attainable, rewarding, and timed. And that rewarding thing doesn't have to be money. Remember why you wanted to get into business, why you want a farm business. What is it that you're going to get out of it? And some of it is really, some of what you get out of a business is the lifestyle that you're going to have and the appreciation that you're going to feel when you bring a tomato like this to a market and sell it to a very special customer who's going to love tomatoes and love farmers for the rest of her life. All right, let's get back to some more numbers. This is the one-page plan that is the one-page financial plan. The blank copy here, we can start that and go to the filled in with an example. And down in the bottom left-hand corner here, where it says Tyler's Tip Top Tomatoes and Historical, this is the report, the historical report from last year, what this business of Tyler's Tip Top Tomatoes, which is again a sort of an imaginary business composed of 40 other businesses like this put together to come up with benchmarks, to come up with what the typical business that's selling direct to retail at a fairly small scale should be able to do. So this box shows, this box labeled historical, shows the recipe. There are 5 lines in there, and if you look down the left-hand side of that box, the recipe, the equation goes sales minus cost of goods sold equals gross margin minus overhead equals profit or net margin. We're getting into numbers. I know that this makes you less comfortable, but these are the only 5 numbers you really need to know to be business minded, to think about your business. How much am I going to sell? Cost of goods. How much is it going to cost me to grow that stuff that I'm going to sell? Gives me a number called gross margin. We'll come back to that. Don't worry about that. Overhead are the expenses that are more likely to be annual. Whether I grow 1 pound of tomatoes or 10 tons of tomatoes, I have those overhead expenses. They're fairly constant. Things like rent, depreciation, interest, repairs, insurance, taxes, all of those things, whether you grow 1 tomato or not, you've got to have those costs. Think of rent. You have to rent the land. You pay a check for the rent to rent land. And this whole example is on rented land because it's conceiving of a beginning farmer who's just starting out and using rented land is a great way to start. Don't buy a farm, rent a farm first, see if you like it. Anyway, this 5-line income statement is really the most important thing I'm going to be telling you in this webinar, and the most important thing for you to keep in your head as the template for being business minded. How much do I expect to sell? What's it going to cost me to grow that stuff? What's my gross margin? How good am I at doing that? Let's stop right there. Gross margin. Look at the box. Sales minus cost of goods sold equals gross margin. If you look at the right-hand side of that box, it says the results are in percent of sales. So this is a way to compare any business to another business. If you talk about what is your cost of goods sold as a percent of sales, you can compare this to any other business. What that cost of goods sold or variable costs involves is all the things that you have to pay for in order to grow that crop of tomatoes that are the more tomatoes you grow, the more variable cost you would have. They're variable because the more you grow, the more it costs you. So let's think about tomato seeds, right? If you're going to grow tomatoes, the more tomatoes you grow, the more tomato seeds you need, the more little pots to start the tomatoes, the more bags you need to put the tomatoes into, the more labor you need to hire to pick the tomatoes and bring them to the farmer's market. So that cost of goods sold are all of the things that helps you produce one more tomato or one more pound of tomatoes or one more pound of vegetables, whatever you're growing. And a good way to think about that in terms of percent of sales is, if you look at the 5-line income statement, this chart in the bottom left-hand corner, if cost of goods sold is $80,000, well, that's 60% of total sales, right? So a good way to think about this is, if I give you 60 cents, you can grow $1 worth of tomatoes in sales. That's how good you are, how efficient you are at growing tomatoes. The basic thing you're trying to do for this business is grow tomatoes or grow vegetables. And that's that sales minus your cost of goods sold equals gross margin. And that's just a number. But that number of, in this case, $54,000 or 40% is how good you are at growing tomatoes. That's what says, if I give you 60 cents, you can turn it into $1 worth of sales, and 40 cents are left over, right? And with that gross margin of 40%, you can do two things with gross margin. You can pay your overhead costs, the rent, taxes, insurance, all that kind of stuff. And or you can put it in your pocket as net profit. A net profit of 10% is what you should expect from a small farm business like this, selling direct to retail, because that's what lots of other farm businesses have done in the past. These are your guardrails. This is how you're going to approach budgeting for your farm business. Let's ahead a little further. We're going to just take this 5-line income statement: sales minus cost of goods sold equals gross margin, minus overhead equals net margin. I know that this is a lot of terms, but that's what you need to learn today, okay? Yeah, I hope you're going to be saying this in your sleep tonight. Sales minus cost of goods sold equals gross margin, minus overhead equals net margin or net profit. Let's take that information and put it into a spreadsheet. You can see those 5 green lines in the bottom right corner of the slide. We're taking the information that you've seen, which is the annual results for this Tyler's Tip Top Tomato business, and we're just putting it into a spreadsheet. When we put it into a spreadsheet, we're able to take this idea of cash flow budgeting and take that 5-line income statement. You can see our 5 green lines under January. Income minus cost of goods sold is gross margin, minus overhead equals net margin or net profit. And then you, in the yellow lines, you add your checkbook or your debit card, whatever you're using, so that you know how much money you start with at the beginning of January and how much you end up with at the end, and what that change in cash is in the middle. Your ending cash from one month becomes the beginning cash for the next month. Easy concept, right? It's really just adding your checkbook to your budget is kind of what we're doing here. You have a budget for what you expect for income, cost of goods sold, gross margin, overhead, and net profit. And you're adding your checkbook to that. So that's the idea of cash flow budgeting. All right. Remember this? This is annual results. This isn't a cash flow budget. This is annual results shown in both dollars and as a percentage of sales. We're calling that the line income statement. We take that and we actually chart that 5-line income statement. You can see our 5 green lines, but all of a sudden they're long, a lot longer, because we've done this for month by month, January, February, March, all that. So we're making this, we're adding more details, but really it's not getting more complicated. It just looks bigger, right? And you can see down on the bottom, there's still the cash flow, what happens to our checkbook as we go through the year. Remember, this is all historical information. This is what Tyler's Tip Top Tomatoes did last year. That's why we know all these numbers. All right, hang on to your chairs. I don't mean to scare you, but this is what your goal is. This is a monthly cash flow budget for the entire year. You can see there's a lot more detail here, and I know that's scary, but if you back up just a little bit, you can still see those 5 green lines. This is still a simple formula of sales minus cost of goods sold equals gross margin minus overhead equals net margin. There's way too much detail in here for me to go through in a quick webinar. But what I'd like to encourage you to do is to download this live spreadsheet. You can see it will be sent out to you, as well as you can see the farmbiztrainer.com website where you can download it from, and play around with it. Put in your own numbers. The place to start when you're planning your business is, how much do you think you can sell of what you can produce? If you've got an acre, here's a rule of thumb. If you've got an acre and you're selling direct to retail vegetables, if you do everything right, you're going to sell between $20,000 and $30,000 per acre. If you have an acre of production, think about how many acres you have, and then think about where you're going to sell this stuff, because how many farmers markets can you go to? How much could you sell at each farmers market? And that's the way to start conceptualizing how you're going to put what you think your farm business will do into this template of what an average small scale direct to retail vegetable based business can do for sales. That's the key here. I know it looks complicated, but there are a whole lot of people that will look at a spreadsheet like this and say, oh yeah, this is great. This is just what I need to see. Did I mention a lender would do backflips? They would be so happy to see somebody come in the door with a detailed budget like this, because it sets expectations as to what your performance is going to be, what you expect to do, and a way to track what you actually have done over the course of a year. Creating a budget isn't about, and it isn't about trying to make up the future. It's about trying to say, so realistically, what can I do? You're making estimates, you're making assumptions. You're not trying to predict the future. You're trying to put your best estimates on what you can do in the future. If you download this spreadsheet and play around, you think your own numbers might be, if you have questions about that, my email address is going to be at the end of this presentation. Shoot me an email. I'd love to talk to you about this by phone and help you through some problems. And there are people that you know already that can help you through this. County extension agent, your loan officer may be able to help you through this kind of more detailed planning. And of course, here's that website that you can go to and download the live spreadsheet, and you should have received as part of the email in advance of this webinar a lot of the resources that and slides that I've been talking here on this presentation. I know that was real fast, but we've got another chance because this is the second of 3 topics that we're going to be talking about. So if you have questions about this so far, please contact me at the email address shown here. And I'd love to help you through thinking about how you can be successful in your small farm business. Thanks very much for being with me today. Let's have some questions.